What's up, everybody? This is Jimmy with Trading Decoded. It is October 21st, 2024. It's 3:58 in the afternoon. The market is not closed, but yeah, we called it quits right after 3 o'clock today, mainly because I had to pick up my kids from school and Dungeons and Dragons and whatnot. But the video title today was I Was Patient. Now, if you watch my videos or you're part of my community, you know that patience is something I struggle severely with. But today I was patient on my second trade, and it paid off. It paid off great, but it paid off a lot more for many other people. And I'll explain why and what I was looking for and why I did what I did. But let's go ahead and take a look at the charts and discuss what we were doing. So in pre-market, the SPY pre-market looked a little weak, if you will, couch in the kitchen like. And then, well, shortly after I drew all my lines, we started to get outside of that range and started to trend up. Now, there was really no catalyst this morning, no news to worry about per se. So I wasn't expecting a move up or down for this matter. But as always, we do call put scenarios. And today was no different. I got to turn these yellow because we did touch them, as you can see here. But our target's high and our target's low are all the same. Anyway, let's go with the call put scenario. So because we were trending up, I was prepared for calls. Okay, that's one of my rules. If we're putting in higher lows and higher highs leading into the open, I do expect us to break high if we come up to a resistance, not low, but we want to make sure that there's reasoning to justify that action, right? So the way we worded it was call scenario is we'd like to be above 583.80, which was criteria number one. Criteria number two was we needed the Qs to be above the pink line. Okay, so right at open, SPY was opening above our call line, but Qs needed to breach this line first. Again, it's a wedge to the upside. Statistically speaking, it breaks up. So I was a little bit more okay with being aggressive on this particular trade. Didn't get in right at open because it did a little funky dancing a little bit. But ultimately, many of us took this trade. Many people didn't. That's okay. I just give you guys my call put scenario because that is me planning for my first trade of the day. Nothing more. It's not something you have to take. If you don't agree with my assessment, you should never spend your money on any trade that you don't believe in yourself. So this one here, albeit worked out, wasn't a huge winner. I got in a little late and I got out when I wanted to, which was Qs making it up to their resistance. However, it's only a 9.5% win. Didn't even meet my daily goal profit-wise on that trade. So I wasn't done for the day. While I was explaining my whole position, let me go back and show you the put scenario. Now, on the put scenario, we had a put line at 583.62. If we got through that line, it was going to be, we were aiming for our futures line down here. Actually, we were aiming for, where was it? It was right here. We were aiming originally for 583.36. It's a little bit of a support level that we made here. It's the first space that if we got through this and ran down to the next support would be more than a 20-cent move. So we would have the opportunity to make some money. Fortunately, we didn't get through that line, so it didn't matter. But what we did do is start moving up, turn this line of resistance into support, stayed above it, Qs, putting in constant highs, constant lows, higher highs and higher lows. We were recognizing that the chart was moving up. Here was my issue. My issue was not that I had a problem with Qs moving up, because clearly we were doing this. I had an issue being comfortable buying calls when the Qs got over 494.67. And I'm going to explain to you why. And if you look at our multi-chart layout, the reason that red box is there is for the reason I'm about to tell you. So this is why I was telling everybody, guys, I know we're trending up on the Qs. We already hit this line once. I have a problem with playing calls above that line. Let me tell you why. Okay, why? Well, let's jump out to a one month chart, and we have our lines here. Okay, I don't know if you guys look at this. I didn't mean to move that line. I don't know if you look at this area on the Qs as being problematic for buyers. I do. I looked at this and said, man, there's an awful lot of wicks up here. Yes, we managed to get through this area a couple of times, but it seems like every time we did, we got beat down. Okay. So my hesitation in buying calls wasn't because I have a problem with SPY moving higher or Qs moving higher. It's just that when we got above this particular line in previous trading session, when I say previous, it looks like Friday, it didn't do so well hanging out up there for long, okay? It did get up there, but it seemed like every time we did, we struggled, okay? So, especially later in the day, okay? I just didn't feel comfortable doing it. So I made it very, very, very clear, guys, you guys trade the trend, you trade what you feel comfortable trading. I do not like calls above that line for this reason, so I'm not going to take calls. The only trade that I'd be comfortable taking, and it's going to be a counter trend trade unless the market starts to sell off, is puts. And here is what I would like to see in order for me to justify taking puts. Now, the one thing that's important to remember here is that I wasn't expecting a massive dump or anything like that, but we pointed out very early in the day that ADD opened slightly negative at negative 383, got as high as negative 280, and then started a pretty healthy trend to the downside. Now, when you couple that with this red box area here, I kept telling everybody, man, I don't like Qs up here for that reason that I already explained. And ADD is aggressively moving down today. That's a lot of selling going on in the market. I would feel more comfortable waiting for a break of the trend line on the Qs and then a close or a breach of a support level, because then we've broken the uptrend on the Qs and I'm looking for a quick counter trend trade with ADD doing what it's doing. That puts Qs and ADD moving in the same direction at the same time. That's all I was looking for. So the very first time that I was able to take my put trade, again, wasn't a huge trade. It did allow me to make my money. And this trade alone covered my daily goal of $500. It exceeded it. So in conjunction with the first one, it was a pretty good day. But what I was looking for was the break of the trend. And then we wanted to get below the first level of support, hoping to get down to the next level of support. You guys could see the alert there. That's why that alert is there. Told everybody. We were talking about this 30 minutes before this trade came. 30 minutes. I said, I'm not buying calls. Here's why. In order for me to take puts, which would be a counter trend trade, this is what I need to see. And if I see those things and ADD is still moving down, I'm taking the puts. Period. And boy, did it play out. It played out something fierce. Now, I only took a small portion of this trade. Later, they would become to be worth over 300%. And that's annoying, but hey, on counter trend trades, I have very specific rules. Number one, we got to get below or close below the trend line. We did that. Number two, we got to get below the most recent support after doing so. Well, that was right here. Okay. If there's enough room before we get to the next support, that's where my target is, which is why the alert was there. We had 2.5 minutes to make it right to where we wanted to go. Now, we had a bunch of people stay in that trade. I was not one of them. I got out here. This ended up being a 20.9% win, getting in from this candle, which was a breach of support, being a little aggressive again because of what ADD was doing. But if you waited one more candle, you still close below support. We're expecting to come down to the next support. It did all the things we wanted to do. So I got my money there and I was happy. I was more happy about the people who stayed in that trade because, well, as you can see, this was our entry candle. This was my exit. Okay, so I was trading the Qs chart, but this is the result of that trade on the SPY. ADD and the Qs. And I said it before it happened. I said, guys, if Qs can meet the criteria for puts, we're probably going to get a very nice move down quickly. I didn't know how big it would be. Certainly didn't think it'd be this big, because if I did, I would have held on for a lot more of it. But you had every opportunity to get into that trade. And if you held it for whatever reason you did, boy, you get rewarded. Okay. These were pullbacks. These were closed below supports, all based on, well, this was the put scenario. So, the put scenario played out as well. We crossed the put line and we were looking for right there, like I told you guys in the beginning of the video, 583.35. Quick move. If you're ready for it, If you're buying pullbacks to resistance, again, at 1033, I believe the cues were pulling back to a resistance. Yep, right here. We're looking for the move to continue down. At the same time, 1033, ADD was certainly still selling off. All of the things that you'd want to see to take puts were in place, okay? Now, after that move down, many people in our community made a lot of money on that drop. Many people got into the move a little bit later and still made a lot of money on that drop. Many people didn't play it at all because, well, they didn't feel comfortable playing puts, which is fine. So when do you switch from puts to calls? Well, it's the same thing we talk about in every one of these videos. Guys, wait for your criteria. Well, oddly enough, we were talking about as ADD gets down into these super negative numbers, close to negative 2,000, I told everybody the best part about ADD being this low, and we were talking about it before we hit the bottom here, it was close to this because this is why I started this drawing here. I said, guys, as we get into this territory down here, what I do expect to happen, because at some point ADD bottoms out or it tops out. It just can't go any lower. And we weren't there yet. Negative 2,300-ish is kind of the bottom. But I said, what you're looking for when ADD has a move like this is usually finding a bottom and moving sideways, okay? And then you wait for the rotation up before you start to consider looking at calls. Now, I drew it this way because I was trying to show people that if we started to move sideways, you just needed to wait for the upturn. It didn't move sideways. It hit a bottom down here. As we were talking about this all happened after I drew this thing because I started to draw it while we were still printing this one red candle. We got a green candle. I was explaining what we're looking for because what this means is that the market has sold off. And when big money thinks that the market is done selling off, they will start to deploy capital to buy the dip back into the market. ADD will show us that when that happens. And you see it right here. So when you couple that with a break of the downtrend line with a candle close, a higher low, you expect resistance, which was right here, to fail, and then you look for it to continue up to the next resistance. If we close above the next resistance, you take it to the next one. If we close above that one, you take it to the next one, and it keeps going. So ultimately, we made it all the way back up to the pink line as the stink line, struggled to get through there. Guys, these things happen all day long. Now, then the chart kind of died and it turned to crap after that. Fortunately, we were most of us were done for the day. I know I was, having missed out on the best move of the day, but getting into it at a good, comfortable time, okay? I took it as a counter trend trade. My rule for a counter trend trade is if I'm getting into a counter trend trade, meaning I didn't expect the market to turn over completely, I expected it to just go down to the next support. I get in at the break of support, I get out at the next support. That's my personal rule. I followed my rule. I waited for the setup on the cues. I got it, and everything worked out. I'm proud of myself, okay? I'm proud of myself because usually I get bored and I get aggressive. And when I do that, sometimes it makes my trades a little bit less comfortable, okay? Today felt really good, not just for me. To see the amount of people in our community that made money on that trade made me extremely happy. Congratulations to you guys. And congrats to those of you who got three-digit percentage returns on that, 100+%. It was there. It moved all the way down into the 300+% range return if you held all the way down. But nonetheless, that was pretty much it, guys. After that, I see no point in taking additional trades. When the chart starts to slow down or ADD starts to move sideways like it was doing here, or Qs start to move sideways, there's not much to look at there. What we do is we go line to line. All of these lines of support and resistance are here an hour before the market opens. They pretty much hold pretty well. They are great for entry, exit points, targets, all of these things. If you can learn how to draw them, which is something we do every Tuesday, I try and teach people every morning. So tomorrow morning, if you're in the community as a paying member, join us for our charting session. We do it every Tuesday. And then I teach you how to draw all these lines, what they mean, where they come from, and how to use them, which is what we do all day in our trading room. But you guys can see with your own eyes every day. Just watch my videos. You'll see how often these lines hold. What you don't know is which one's going to be the last one that holds or when it's going to fail, but they're there because they work. Okay. And with that said, we're going to wrap it up. Hope you found some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join our Discord community, we'd love to have you. The link is down in the description below. It is completely free. As soon as you show up, you will have access as a paying member, but you won't have to pay anything for the first 7 days. If you like what you get for that 7 days, then you might want to consider being a paying member to get and keep that access and more. Otherwise, thanks for stopping by. It's my hope that you learned something, even if you don't become a paying member, from what we do in here every day. Because in the end, I just want you to become a better trader, regardless of whether it's with me or somebody else or a different strategy altogether. I believe that what I teach you guys or my people in my community is useful in any style of trading, whether it's futures, Forex, crypto, whatever it is. Support and resistance, in my opinion, is key, and price action is everything. So come in, enjoy the free week. Stay with me or not. It's okay. And there's no hard feelings. But with that, that's pretty much it. So until tomorrow, I love you guys. See ya.